Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Reply All is the button that reveals who people really are. The meeting has an agenda. The agenda is decorative. Hustle culture is just exhaustion with better branding. We're pre-revenue. So is everyone before they make money. This is not a strategy. Failure is a great teacher. It's also very punctual.
Markets did not wait for the dust to settle. They reprice instantly. This chart shows a clear pivot. The Middle East conflict has nudged global rate expectations back into higher for longer territory. Inflation risk from energy is step 1. Step 2, demand gets squeezed, growth wobbles, and suddenly central banks are juggling inflation, slowdown, and financial stability all at once. The Fed has the toughest gig here. Dual mandate, double headache. The ECB and the Bank of England slightly simpler but not easier. And the Bank of Japan still playing its own game, just with a little more awareness now. What's really being priced isn't just rates, it's uncertainty. Policymakers aren't choosing the best outcome, they're choosing the least damaging mistake. Different continents, different reactions. Since the war began, the US equities took the hit and then sprinted back. Europe still catching its breath. The divergence is telling. America's market is riding big tech muscle and relentless dip buying, while Europe remains far more exposed to energy shocks and growth fragility. But here's the catch. This isn't just about who's stronger. It's about whether either market is pricing reality correctly. Right now, resilience looks less like confidence and more like a habit. Investors aren't asking, is this justified? They're asking, is there any other alternative? Here's the milestone. In 2025, every extra unit of global electricity demand was met by renewables. Solar isn't just growing, it's doing the heavy lifting. Fossil fuels flat on net growth. That's a structural shift, not a headline. But before we declare victory, energy is in one market, it's two. Electricity is getting cleaner fast. Transport fuels still stubbornly liquid, portable, and oil dependent. The same year renewables won, a disruption in Hormuz reminded everyone what actually moves planes, ships, and geopolitics. So yes, you can electrify the grid, but a long-haul flight still runs on physics and not optimism. Exports are rising, but the real question is, who's actually keeping the money? This metric, the domestic value capture ratio, tells you how much of export value is created at home. And in India's case, it slipped from 0.35 to 0.3. Translation, we are exporting more but retaining less. That usually signals deeper integration into global supply chains, more assembly, less value add. Great for volumes, not always great for income. Across peers like Bangladesh or Vietnam-style economies, the playbook is similar early on, but the winners actually move up the value chain. That's a pivot India needs. Because exports don't build wealth, value capture does. Energy geopolitics just went from slow-moving tanker to speedboat. India imports 60% of its LPG and over 90% of that flows through Hormuz until it did not. A 40% drop in March volumes forced a rapid pivot. Gulf dominance fell from 90% to nearly 55% in weeks. Enter Russia, the US, Argentina, even West Africa. Supply chains that took decades are being redrawn and almost overnight. One cargo at a time. But diversification is not free. Longer routes, higher insurance, and logistical friction mean costs rise even as risks spread. This isn't just trade, it's resilience under pressure. And energy security is now being priced in real time. The headline looks decisive. America with 13,000 plus aircrafts comfortably ahead of everyone else. But in modern warfare, counting planes is like counting keyboards in a hedge fund. It tells you very little about performance. Capability beats quantity. Stealth, surveillance, electronic warfare, pilot training, and network integration. That's where the real gap lies. The US lead isn't just bigger, it's deeper. Meanwhile, countries like China and India are scaling fast, but still balancing legacy fleets with next-gen upgrades. So yes, the rankings show size, not necessarily strength.